Hi, welcome to the Occupancy Report. My name's Autumn, and here we cover things all occupancy. It's kind of like a weather report, but it's market conditions for the short-term rental market. My name's Autumn, and I have been in Airbnb now for 7 years. And however, I did not know how to read market data until last year. Now, occupancy is everything. Occupancy is simply supply and demand, but without it, you don't have a business. That's how important it is. Okay, so let's get into it. We're going to cover Seattle. And fun fact, I used to live in Seattle. I really, really loved it. I'm just clicking around here on the Airbnbs and I just get so nostalgic. I lived there 20 years ago. Okay, so here is Seattle. We're going to cover this. This is all brought to you by Price Labs. And Airbnb listings are pretty densely populated here. So this goes here from Green Lake all the way down to Beacon Hill. So here we're going to look at our last 30 days because this is for the month of February. Y'all are right in the middle of low season. I can see that. So it looks like you've got $1,600 of estimated revenue. Your RevPAR, which if you don't know, RevPAR is revenue per available room, is down to $61 per, it's basically $61 per bedroom. Occupancy, we're sitting at about 47% right now. Average daily rate is 130. We have 5,000 active listings. That's how many I purchased through Price Labs. You can do 10,000, 5,000, or 1,000, and it looks like 5,000 is about, it gives you a good estimation. You've got about 20,000 bookings for 5,000 listings. So not terrible. Your booking window is pretty long right now, 41 days, and your length of stay is about 3 days. So we're going to go down here and hit the data. You can see this. This is really interesting to me because I'm living in Austin right now and have been for a long time, but y'all have a very steep high season and low season compared to us. So as you can see, this was February 2 years ago. Your estimated revenue was about $1,780. Estimated revenue a year ago, $1,737, very consistent. And this year, right now, as it stands today, which is February 19th, you're looking at $1,500. So average RevPAR, it was $68 2 years ago. We've got $65 2 years ago, pretty consistent. And we're looking at 50, I think that's 53. Hold on. Can I move this? Okay, looks like 53, right? 57. So let's see here. Let's do that again. 68, 65, and 57. Okay, so you've got a decline there. You could end up, you are not getting to 1737 for revenue this year. I don't think. I could be wrong. Okay, here's average daily rate. You've got $130 2 years ago, $130 a year ago, and $132 this year. So very consistent for average daily rate. Average occupancy, this is the most important thing. This is the occupancy report, so pay attention. So in 2023, you had 52% occupancy. In last year, you had 50% occupancy. And this year, you are sitting at 43% right now. If you take a look at this graph, y'all, from my experience of being in the air and being in this business for the last 7 years, 60% occupancy and above is good. 70% is like beautiful. Anything above 70% and you're super good. But 60% is comfortable. If you have a good product, you're gonna book. When you get down here into 52%, it's lean. It's lean pickings and it's a little painful. Like you're basically breaking even. Some people are making money, some people aren't making money. It's kind of tough. So that was 2 years ago. This year was 50, so we're looking at it a little bit less, and every point counts when you're talking about occupancy. And down here at 43, and then you have 43 last month and 49 the month before that. Y'all, sitting in the 40s is rough. That is what I call fallout, and where Airbnbs are closing. And that is what's happening in Seattle. And it's not just Seattle. That's happening. The short-term rental market is contracting right now. So this sort of thing is what you're seeing here in Austin as well. So yeah, but look at this, y'all. I was really interested to see this. I'm kind of a data nerd. And look at these numbers that y'all get. 60, 61, 67, 81, 86% booked. That is gorgeous. Like we don't even get that down here at all. 62, 58, 58's like slipping a little bit. All right, April. And then 71, 82, 83. So not quite as high as the year before. So y'all are seeing like less activity in this market. And some of that's due to the economy. Some of it's due to public opinion of Airbnb. Most of it's due to the economy. And y'all, I don't know how heavily y'all are dependent upon Canadian travelers. And I hear Canadians are really canceling reservations these days. But yeah, y'all, Seattle has basically 1, 2, 3, 4, 5, 6, 7, 8 months a year of high season and shoulder season. That's really solid. That's better than Austin. Austin's got like 4 months of high season now. So y'all are doing good in that way. I know that the winter months are probably pretty tough. So November for you is shoulder season, and then December, January, February are low season, and it looks like March is actually shoulder season as well. Okay, your booking windows. I'm not going to go over this in much detail, but booking window is basically you've got 19 days here, 14 days here. So the booking window goes up in high season because occupancy people are booked. So you've got to plan ahead, and then it goes back down in low season because it's just so available that people book last minute. That's basically what that means. Total book nights, not really that interesting. It follows occupancy. Active listings here, this is more interesting. So in the same area of Seattle that I chose with downtown Capitol Hill, kind of the center point, you've got 6,000 listings 2 years ago. A year ago, you have about the same. And then this year, look at this, 5,200 listings. So y'all, and you can tell by this, the arc of this graph that y'all are kind of dropping off a bit here. And this isn't just low season. This is actually some Airbnbs shutting down because y'all, when you're booked in the 40s for 3 months, it's tough. It is tough. And people just have no choice but to lease them out long term. Okay, so here you can see that you'll have a little bit of increase in bookings. Your bookings are looking a little slow right now, Seattle. So here's future occupancy bookings and cancellations. If you're on Price Labs, you can go hit this pickup, go hit occupancy for last year, and it's going to show you what y'all are booking at this coming weekend. You've got a 52% occupancy, and for this coming weekend, and for the weekend after that, for March 1st, you're looking at 41% occupancy right now. Oh, for the last weekend, yeah, 40% occupancy. Nothing to get too terribly excited about, but you could get up into the 50s. Y'all are sitting at 43% occupancy right now. I don't think you're going to get to 50, not with these numbers. You can see that your bookings are low right now. Y'all are, I mean, even for March, you've got 16% pickup, 12% pickup. Looks like the demand is pretty low right now. I don't think you're going to get occupancy as high as you have for the past 2 years. It's going to be a few points less this year. 2025 might not be the best year for Airbnb. Okay, so here are your prices. Right now, at the 25th percentile, you're looking at under $100. At the 50th percentile, you're looking at $122. The 75th percentile is $160, and 90th percentile is $225. So what does this mean? What this means is if you have a unit that is priced over $225 per night, you are in the 90th percentile. And with things booking in the 40s, you want to be in the 50th percentile or lower, unless you have some sort of like a luxury situation, or you've got a view or something like that. Unless you have some special sizzle factor, you're going to want to be down here in the 25th to 50th. All right, when we go over here though to high season, which is June and July, I'm sure I don't need to tell you all that. You're getting into the 90th percentiles up at $500. So big difference. It's basically charging twice as much. Okay. Looks like your desired amenities coffee, Seattle. I love you. Okay, extra pillows and blankets, cleaning products, wine glasses. All right, these are the amenities that you're going to want to get. Oh my God, it's so freaking cute that your top amenity that people want is coffee. I'm going to die. That would be like down here if people put like salsa, okay? No one puts salsa on there. Our top amenity is like extra blankets and pillows. So wild. Okay. All right, y'all. I'm going to go over the VRBO information, which is actually pretty interesting. I'm not going to go over all of it like I do with the Airbnb. I'm just going to go over the KPIs. It is interesting. And I'm going to go over the map if I can. So looks like we've got almost $3,000 of revenue. So the revenue is higher. VRBO is mostly houses. And if I when I show you the map, you're going to see this goes all the way over to Bremerton and all the way over to Snoqualmie and all the way down to Tacoma and all the way up to Everett. So it's just all of Seattle, you know. Revenue, $3,000, RevPAR is 104. So you're seeing a little bit higher, a lot higher RevPAR. You've got about the same amount of occupancy. Your average daily rate's going to be higher. Again, these are houses. You've got 2,000 listings in all of Seattle. That is it. So you can see that bookings, you had 20,000 bookings as opposed to 10,000 bookings. They're a little stronger, but I just think that's just because it's houses. Okay. So you can see here's the map. It goes all the way from Everett down to Tacoma, all the way over here to outside of Silverdale, and then all the way over to, looks like Carnation, Snoqualmie. Yeah, that's a huge area. I'm not really going to go over all of this data. It's not going to be, it's different. It's different numbers, but the patterns are the same. You're still $99 RevPAR. It's just not that. I don't want to bore you. Let's not go too crazy with the data, okay? So that is your report, y'all. Listen, my big tip for y'all is if you are downtown in Airbnb, you want to be on Airbnb and booking.com. Those are where you're going to get more bookings. I wouldn't go on to VRBO if I were in Seattle proper. Maybe if you had a house out in Everett or something, certainly, but not for downtown. They're just a totally different animal. And look for more reports in the future. I'll be putting up one out every month. Also, if you're out in Everett and you want me to run a report for you, let me know. You can email me at theoccupancyreport@gmail.com. Hope you enjoyed this report. Know your numbers, know your occupancy. You don't have a business without it.